Are you a real estate investor looking to elevate your income, freedom, and lifestyle? If so, optimize your daily performance by downloading our free guide, Raising the Bar, 5 Steps to Elevate Your Habits at elevatepod.com. In this guide, created by yours truly, you'll learn why you do what you do, how to easily institute cues in your environment to trigger desired behavior, directly applicable steps to create a fulfilling future, and much more. Get your free copy now at elevatepod.com and kickstart your new habits today. Your future self will thank you.
Welcome to Elevate, the masterclass where we dissect the elements of exceptional achievement and lifestyle design with a focus on personal growth and real estate investing. Now, here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here, and I'm blessed and grateful to be sitting with Gary Lipsky today. Today, you're going to learn mastery of asset management. You're going to learn about execution. You're going to learn about delivering on your promises. You're going to learn about executing on an investment vision that you have in real estate and so forth, right? Stacking on that and compounding and creating massive growth through real estate, playing the long game the right way, because it's not about speculation. It's not about luck. It's not about a hope and a wish and a prayer. It's about execution. And today we're going to be talking about execution. We're going to be giving you strategies. You're going to learn strategies towards executing on your investment thesis. And that's what it's all about. If you want to do big things in real estate, it's not about hoping, it's not about wishing, but it's about putting rubber to the road. And that's what you're going to get today. Elevate Podcast is all about mindset, mind expansion, and personal development for high-performing real estate investors. I'm your host, Tyler Chesser, and I'm a professional real estate investor and high-performance coach. It is my job to decode the stories, habits, multifaceted expertise of world-class investors and other experts to help you elevate your performance and lifestyle. Are you ready to take it to another level? It is time. Let's raise the bar today. Before we dive in, I want to ask you, if you haven't done so already, to share the podcast, share this episode with a friend, someone in your network, someone that you've just met, maybe someone that you've known for a long time. Share with them Elevate Podcast. The only way that we can continue to grow is if we receive the value of your referral, your introduction, just like any other small business would do. We ask you that you help us grow. And the only way that we can do that is if you share. So that's the fee for listening today, is just to pay it forward, grab the link, send it on social media, send it a text message, send it in an email, whatever you need to do to pay it forward. If you've already done that before, thank you. And we just ask that you do that again to listen today. If it's your first time listening to Elevate, welcome. We are going to bring massive value to you. I have no doubt about that. We're going to continue to bring the heat. And I also would like to ask you to give us a rating, a review, and subscribe or follow Elevate Podcasts on wherever it is that you listen to podcasts. Because guess what? We're going to continue to bring massive value in so many different directions. Also want to know your feedback. What do you love about Elevate? What do you want to see more of? What do you want to see less of? What do you want to see different from Elevate Podcasts? I want your feedback. I want to have you be the owner of the future of Elevate Podcasts. Send me an email at info@elevatepod.com. What's awesome about Elevate? What would you like to see more of, less of? Also send me a DM on Instagram at ElevatePod. I want to know from you, what is it that you want to see? Who do you want to hear from? What type of questions, what type of discussions do you want to hear about? Do you want to hear more about crypto? Do you want to hear more about some of the practical tips, solutions, tactics? Do you want to hear from some of the world's greatest athletes? Because guess what? We're bringing them, but I want to know from you, is that what you want? Who do you want to hear from? So anyway, with all that said, I want to dive in. I want to introduce you to Gary Lipsky, who is a real estate entrepreneur who has a focus on multifamily syndication and currently has 65 million of assets under management. He is the president of Break of Day Capital, whose mission is to positively impact the lives of their investors and the communities in which they invest through the highest level of transparency and fiduciary responsibility. You're definitely going to see that today. Gary is the host of the Real Estate Asset Management Podcast, where he speaks with various experts in the real estate industry to help educate asset managers. By the way, I was on that podcast and he does a phenomenal job. I feel like he brought the best out of me, but he does that in such a high regard. So I definitely recommend you go check that out. If you're a real estate investor yourself actively, you definitely want to learn more about that, but you're going to get a tremendous amount of value on that today. Gary is also the best-selling author of Best in Class and founder of the Asset Management Summit. So without further ado, please enjoy this very insightful conversation with Gary Lipsky. Gary Lipsky, welcome to Elevate. How are you?
Good, good. Thanks for having me.
Man, I'm super excited to have you. And as I was mentioning to you before the podcast started, I know that we can go deep in, strategy direction today. I think we will. And I think we're going to serve many real estate investors today to take their asset management gains to the next level, because at the end of the day, it's all about execution, right? We can have an investment thesis and a goal and all these things, but we can never put rubber to road unless we have an execution strategy. So I know we're going to talk about that today. But Gary, before we dive in, if you were to describe yourself in the way that people that know you best would describe you, what would they say about Gary Lipsky?
I guess I'd say I'm a go-getter, passionate, loyal, maybe too honest to a fault at times.
I love it. So in what way? How are you too honest? Like, what does that mean?
So, I mean, I was born in New York. I'm a Northeastern, and we speak our mind, and we could be, or I can be a little bit direct to the point. And I've gotten better about that, of how to soften it up or whatnot. But I'm a no BS guy, so I'm going to tell it like it is. But I'm going to try to do it in a very nice way.
Yeah, and you do that, man, because I was just on your podcast. It's so funny. I'll share this, the Real Estate Asset Management podcast. By the way, I recommend the listeners go check that out. But it's funny because, we do a little bit more long form, and I wouldn't say this is completely long form, but in comparison, your podcast is 15 minutes. And it's like, let's get to the point. So you live that every single day. But Gary, talk a little bit about your backstory, your upbringing. You mentioned grew up in New York. Obviously now you live in Southern California. So talk a little bit about your backstory. Give us a sense of where you came from, what life was like growing up, and so forth.
Yeah, I was an entrepreneur at a young age. I was shoveling driveways during the winter. I was auto detailing cars during the summer. And so I had that entrepreneurial spirit. I remember, I was just back at my parents' house over Thanksgiving, and I see like Wendy's Way, that book. I have a bunch of these entrepreneurial books that I bought. Lee Iacocca, believe it or not, like still in my room at my parents' house. So I always had that bug. I actually started a restaurant delivery service in college, kind of like DoorDash and Postmates. Then I co-produced 3 independent films in my 20s. So I never really worked for anyone else. And I wish my parents, my family talked to me about real estate, when I was younger. They never really did. But I had some friends in real estate. And I knew they were doing well. And I saw that, so many people that were doing well were in real estate. And so that got my bug. And I started investing a little bit in 2002, and just really dabbling, but I didn't really get into it full time until I sold a business at the end of 2016. And I jumped in full time at that point.
Okay. And so when you said you dove in full time, like what did that look like? Was that syndicating large deals? Was that investing your own capital? What did that look like in 2016?
Yeah. So just learning, quite honestly, learning as much as I can, going to conferences, meetups, reading books, and start investing in other people's deals through my retirement money. And most of them did well. One did really, really poorly. But it made me, it gave me the confidence to start doing it on my own. I had the skill sets from running businesses, and multifamily was a good fit for me. And so we eventually, I was looking at 12 unit deals, small stuff. And then I got involved in like a mentoring group and talked about doing bigger deals. And so eventually I partnered up with 2 other people, and we closed on a 42 unit deal. And that was a $1.65 million deal. And then from there, we jumped into a little over a $15 million deal after that. And, we had a lull for a little bit, and then we just started cranking right after that. So it was just keep learning and learning and learning.
Yeah, you were stacking on your experiences. So when you got started, you were investing in other people's deals. Like, were you already networking in the space before you bridged that gap? Like, because you mentioned earlier, you're like, I looked around, the people who are doing well were in real estate. Were you already like, this was a plan? This was sort of your next iteration of your own investment career, your entrepreneurial career? You already knew this, or how did that work?
Yeah, I wanted to be a syndicator. I wanted to use my creative side, my business side, and leverage other people's money. But you mentioned networking, and quite honestly, I didn't do that enough when I started out, because I had a very small window of who was doing deals, and I should have done a lot more research on those people and had more deals to look at, quite honestly. And so I definitely recommend that to people starting out as well, because you go with what you know, or you see someone on Facebook and they seem to be doing really well, but just because they're on social media doesn't mean they're doing a good job. So that was, I didn't do a good enough job of that in the beginning. But yes, but I learned from other people what they were doing right, what they were doing wrong, and then I was able to take the leap of faith on my own.
Yeah, I think investing with other people, passively investing, is a great way to learn, a great way to get a foot in the door and to understand. And look, we never make perfect decisions as we get started, right? Looking back, it's like, oh my gosh, you could have done so many different things so much better. But then as you took that next step, as you bought that $1.5 million deal, then you jumped into a $15 million deal, obviously, I would imagine then you started to look around and say, all right, yeah, it's great. We got the deal, but now we got to execute, right? And so talk to me, when did asset management become, sort of your foray, like the place that you wanted to add the most value? Talk to me a little bit about that.
Yeah. So, running business my whole life, that was my skill set. I was really, really good at that. And so, we wanted to hang our hat on something and as well and learn from others. So we looked out there, and there was a lot of gurus out there talking about how to get your first deal, but no one talking about what you do with that deal after you get it. And there was this kind of emptiness, and so I wanted to learn more, and so we said, okay, let's start a podcast, let's create a book, let's start a summit based on this. And part of it was to learn from others and have really good operators come on, and we could ask the questions that we want to ask selfishly, and really up our game too. If we're going to be talking about it, man, we got to build our systems better. Everything that we do, we've got to get better at. And so it was this kind of 3-prong approach. We thought we were pretty good at it. We wanted to learn from others, and we wanted to improve.
And you saw an opportunity in the marketplace, as you mentioned. I mean, it's almost your blue ocean, right? You're known as the asset management expert. And of course, you wrote the book Best in Class. And so I think becoming a best in class operator should be the goal of anybody listening to this podcast, because if you want to take your game to the next level, it is about execution, right? It's about optimizing execution. It's about making your investment work. It's about bringing your business plan to life. So, I'm going to ask some selfish questions today. You were talking about questions that you've asked throughout the years that have been selfish for you to take your business to the next level. I hope that I can then give this as well simultaneously. So let's talk about a few things. I mean, some of the pillars and some of the categories, I guess, in terms of asset management that you wrote about in the book. I mean, so we can talk about marketing and leasing. We can talk about managing renovations. We can talk about evaluating property performance, financial analysis, managing the manager, and so forth. But where do you think that we should start in terms of, starting from a high level and then digging into the details?
Yeah. So high level, I would say being proactive. Quite honestly, it starts with 3 pillars: measure everything, being proactive, and having accountability. So being proactive is, so I'm closing on a deal Monday, and we've already came up with a new name. We've got sat down with a property management team multiple times on our business plan execution. Like day one, we're ready to go. And so I'm not waiting to take over and then come up with a new name and then start getting into, working with vendors to figure out the paint scheme and getting it done. Like, let's rock and roll from day one. The shorter I can reduce the timelines, the better off I'm going to be. The more money, the faster I'm going to be able to put into my investor's pocket. So I'm always trying to be proactive. And if you're proactive, you can not only survive a COVID or Texas freeze, you could thrive in those. And that's the thing I want to do. I want to get ahead of it. Always, I want to be ahead. Measuring everything. So we built out KPIs. We use RealPage that connects with the RD software. And so I'm able to kind of measure everything, break it down, and they give me tons of different options that I can choose. And it really makes it in a very digestible format. And I can look at a lot of different things in different ways. And at the end of the day, it helps me make better decisions. So let's say marketing you mentioned earlier. So I want to see the conversions. Apartment guides might bring me the most leads, but where am I getting the most conversions on those leases? And so I could take a look at that, and I could break down all these different things. I could break down, let's say I have 12 unit types, and so I want to see, I'm not looking at it as a whole. I can look at it each unit type and see, hey, can I increase the rents on those because I'm, let's say, 96% occupied, and then only maybe one that's at 80% occupied that's pulling down the whole thing. And so I can maybe, if I had 12 different unit types, I could raise rents on 11, and maybe on the 12th unit type, bring it down just a little bit to get it up. So that being able to measure everything and breaking it down is everything.
I agree. And this was, you actually got ahead of me because you already talked about a tool. I was going to ask you about, hey, what tools are you using to integrate data and to help synthesize data to insight, right? Because it's not about information, it's about insight so that you can make effective decisions. And so you talked about using RealPage to connect to the Yardi software to give you a dashboard of key performance indicators or KPIs, right? Give us a sense of what KPIs that you find that are most important to track. I think you just mentioned there some really important nuances to say, all right, well, this particular unit type is in higher demand. So now we're seeing a nuance in this asset that we can make a decision and we can increase revenue for that particular unit type. But talk to me about, from a high level, from a KPI perspective, what have you found has been most useful to track and help you make better decisions?
The unit type, the lease conversion is most important. Renewals.
I like that one. Yeah.
Renewals are really good. You want to, even if you're drastically increasing rents, you want to see people staying in, and particularly at least after you make that first churn of residents, you want to see people staying. And if they're leaving, what's going on? Why are you not providing that quality for them to want to stay? Because obviously you're going to market rent, or it may be above, and you're trying to give your residents something above and beyond your competing properties. So if you're not doing that, then there's something wrong. Maybe it's your property manager that you need to look, but it's giving you data points to ask the right questions. Obviously NOI, everyone's looking at NOI, and that's a great like incentive tool for your property manager, because you have to be careful on your incentives, because that's where energy will go. If you focus on renewals, then maybe something else is going to be lacking. But if NOI covers the whole gamut, so it really covers you to have your team focus in the right direction. And it could still be your maintenance manager and your technician can be still part of that NOI piece, because it all plays a role. If people want to stay, if you're doing quick turns, if units are getting renovated fast, that all plays into NOI. So that's a really good way to incentivize and have everyone working towards that same goal.
I think that's important. And when you think about doing big things, and if you're scaling your team, you've got to align incentives. And I think it's a huge takeaway to say, all right, well, ultimately what bakes in everything? And it's net operating income, right? Because we can focus on lease ups and all this kind of stuff. We can focus on, turn costs or whatever. But if we're not focused on the bottom line, then we're out of whack. So I think that's super powerful. When you think about managing renovations, I think this is a critical one too, especially with the supply chain, everything just going on, labor issues, delays in materials, increase in costs across the board. How are you managing renovations and staying on the same page with your property management team?
Yeah, that's a really good one. So we use a Trello board, and it's free. You can pay for additional, if you want more bells and whistles. But so we know when the renovation team needs to be notified of when an apartment is going to be vacant. And we know how long it takes to get materials, whether we need to pre-order a bunch at one time or it's a 4-week lag, whatever it is. Again, it's that being proactive. We want to reduce timelines. So making sure everything is aligned. So boom, as soon as someone moves out, we're getting to work on this apartment. And there might be times when, at least when we take over a complex within that 12-month, where there might be more of a spike in turnover. So maybe we bring on a technician to help us, or a painter, whatever, during that 1 month to get those turns much quicker. Even if it costs us an extra $2,000, if we can get 4 units done quicker and someone in there, our NOI just went up $2,000. So
Right.
we always want to be proactive and kind of measuring, and on the Trello board, we can move it from it's going to be vacant to, okay, we've done the flooring and then the next piece and the next piece, and they just move it along and we can track it.
How do you guys make shifts? I mean, because when you're putting together a business plan, or when you're looking at a deal and you're negotiating a deal, and then all of a sudden, oh, wait a minute, we got the deal. Now we're doing due diligence and we raise the capital and we've now purchased this deal. Your projection versus the reality can ultimately, differ in some ways, right? And sometimes it's in a big delta, sometimes it's narrow. And obviously it's never, a pro forma is never exactly what reality sets itself to be. But how do you guys set contingency plans, whether it's on renovations or just execution of the asset, whether it's turns or repairs and maintenance or just staffing or marketing? I mean, talk to me about, from a high level, the way that you guys look at building contingency plans into deals.
Yeah, I think first of all, you have to be flexible because things are always changing. You might pivot in your business plan. So it starts with your underwriting to have that. I'm not going to be so aggressive. I'm going to always under promise and look to overperform. So I've got these buffers in there. Rents aren't going to be as high as I really think they can go. I'm going to raise extra money for my CapEx and have that buffer, because if things end up costing more, then I've got that margin for error. Or if I wanted to do something I didn't think of previously, I can do that. So having that is really important. And then also in your the rest of your pro forma, having things that, I'll have my property management budget and hold them accountable to that, but my budget might be a little less aggressive. And so, I could push them on theirs and realize, hey, I've got, a little bit of room for error,
I hope your property managers are not listening to this podcast, because your secret might be out here. No, that makes sense. How else does financial analysis play into the way that you're executing deals?
Yeah, I mean, I think our property management accountant loves us and hates us because we ask a lot of questions, and most of the time, there's a good reason, but we'll find things. Maybe something was accidentally charged to our property, or we paid a bill twice. There's little things that add up over the course of your owning a property that
totally,
people make mistakes, and they're not trying to do it on purpose, but that financial analysis is really important, and constantly looking at trends. One of our acquisitions, we started off amazing, but we knew we were going to have to pay the piper a little bit because we thought there was some bills that weren't getting paid and this and that, and we're following up and whatnot, and payroll was going to catch up. There was little things that we knew that we're kind of inflating it from the beginning, and just asking the right questions led to things kind of balancing out as a few months kind of tapered off. And there's little tricks that a property manager can do, and they shouldn't be doing, but you could hopefully catch them on it and rectify any kind of fluctuations that are going on.
Yeah, I think being detailed in your review and holding them accountable at the end of the day, and questioning and saying, well, wait a minute, where did this expense come from? This doesn't look like something that we agreed to. How often are you meeting with your property managers? Or once a week, or how does that look?
Yeah, we do a weekly Zoom call every week, even once we're stabilized. So we have a very detailed weekly report. It breaks down everything so we can ask the right questions and not waste a lot of time. And so that's due before our call, so we can analyze that and then ask the right questions. And if we're humming along doing great, then maybe it's going to be shorter. If in the beginning, it's going to be longer. And then, I'm out visiting the sites every 2-3 weeks. We do, surprise visits. I don't always tell them when I'm coming. We do secret shopper reports. So there's lots of different ways that we're making sure we're executing no matter what, like whether they realize I'm coming or whatnot, and we make these. We're not trying to catch them doing something bad. We're trying to catch them doing something good. And if they're not doing it right, then it's a teachable moment. Mm-hmm. And obviously, if we have many teachable moments, then we've got to have a tough conversation and make a change potentially.
Yeah, of course. Talk to me about, what does a secret shopper report look like? Give me a sense of what that process looks like from your team.
Yeah, so we have a rating. We'll do an email. We'll also do a phone call. We want them to make sure. We'll ask specific questions like, "Hey, I've got a dog. Is there a dog park? Is there dog rent?" And so if they're not answering the questions specifically, they're not engaging with me. And we want to make sure they include pictures and other things that are going to make me choose that apartment complex over something else. And the response time too, how quickly they respond, because if it's 24 hours later, that person probably, found another apartment by then, potentially.
Yep.
So speed is really important. They're getting graded on speed. And so all these different things we kind of grade them on, and on the most important, they might get 20 points, or something less important, it might get 5 points. And we just do a grading system on that. And then we'll share and go over it with them and say, "Hey, this is where you can improve. This is what you did great on," and whatever the results are.
Hey guys, just a quick word from our sponsor, then we'll be right back to the show. This episode of Elevate is brought to you by CF Capital, a national real estate investment firm founded by myself and my business partner, Brian Flaherty. CF Capital's mission is to provide property investment and asset management solutions to help investors like you maximize their returns by investing in high-value multifamily communities. If you are looking for risk-adjusted alternative investments in quality apartment communities, are seeking tax-optimized cash flow with appreciation upside without all the hassles of management, you might benefit from learning more about investing alongside our team. You're invited to reach out and learn more about how you can invest with us by visiting cfcapllc.com. We're also currently offering a free ebook called The Bottom Line, 10 Ways to Increase Cash Flow in an Apartment Complex. Whether you're a new or experienced investor, we're confident you'll find massive value in this resource. So go get your free copy today at cfcapllc.com. And now please enjoy the rest of the show. I like that. It's almost like an internal audit, right? It's continuing to iterate and improve systems. And I think if you create a culture of, hey, you know what, at any point in time, we could be getting secret shops. And it's not, hey, we're going to be in trouble. This is an opportunity for us to showcase our talents. And I think if you surround your team with high performers, they welcome that challenge. And at any moment they're, you know what, I'm going to perform to the highest of my abilities because, I could be being held accountable, or I could be executing on my job even better. So talk to me about what other, ways that you manage the manager more effectively, or maybe some ideas or tips that you might suggest for the listeners.
Yeah, so we use Google Docs. So our weekly report is in a Google Doc, and so every week it's tracked. And then we'll also have a tab for things that need to get done. And so it'll be who's it assigned to, when, what needs to get done, when it was completed. And so it's there for everyone to see. And so you don't want to screw that up, so, because, you're held accountable. It's for everyone there. And again, it's not a gotcha, and it's a good reminder too, because sometimes I'm writing notes down on a little piece of paper, I'll forget, or someone will forget. You can always go back to that sheet and say, what did I promise to do and when, and make sure it gets done. Yes.
And there's this little spike that happens like the day before the meeting. It's like, oh, I have 4 to-dos and I didn't do it. And I know that if I don't do it, I'm just going to feel like an idiot with the rest of my team. So that happens. Who cares? I mean, at the end of the day, it's like, let's just get it done over the next week. That's awesome. So what other technology do you use? You mentioned RealPage earlier, connecting with Yardi, right? So those are 2 pieces of technology. You mentioned the Google Suite. What else do you use to help kind of optimize your system in managing your team and managing the manager?
Yeah. Well, I mentioned the Trello board. Those are really the key things that we use. And I mentioned RealPage. I mean, they've been good and bad in a way. There's some other tools out there too. I'm not saying that's suggesting the only tool, but
fair enough.
Yeah. And internally, we like to use Monday.com for a bunch of different things. The maps you can use, and communication and stuff like that. So we like Monday.com a lot. It's free or relatively inexpensive. Most of these tools are relatively inexpensive, which is great. Even
I'm not familiar with Monday.com. What is that?
Yeah, so I use it for a number of different things. Our investor list, where they live, deals that we're looking at. There's a lot of different things that you can use it for. So definitely check it out. I highly recommend it.
No, that's awesome. And neither of us really benefit from that, but I think it's in the goodness of sharing this type of information. So you mentioned earlier, like utilizing it and tracking KPIs. Did you guys put together like a dashboard that pulls together the key performance indicators of each asset? And if so, give us a sense of a little bit more detail of what that looks like.
Yeah. There is, our key ones are on the top. But then I can dive into like, 100 more. But our key ones are on top, and I quite frankly, it's like NOI occupancy, some of the basic ones, and then I can dive in. And then like when we do our investor calls on a quarterly basis, I could share some of the key KPIs, things that's going really well, and anything that's not going well. We're honest with our investors and say, hey, these are things that we need to improve upon, and we're accountable for that. So we'll dive into them, and it covers pretty much anything and everything that you want to understand. It can pull it from Yardi, so it's really cool.
Well, I think to your point, like, let's keep our eyes focused on, like, let's keep it simple, right? At the end of the day, we're looking to drive NOI, which drives value. And obviously that can feed into the overall business plan, the overall investment thesis. But ultimately you can prescribe the issue. If you're having an issue, you can look across different sort of leading indicators, right? I call NOI a lagging indicator. That's a lagging indicator based on your marketing, your expense ratio, your leasing, all these different things, right? And so you're looking at that, but then you can draw down to the dashboard and say, all right, well, this key performance indicator is obviously out of whack. So now we can make some shifts, we can make some course corrections and so forth. Is that how you use it as well?
Yeah, I think that's a great point, talking about leading and lagging indicators, because that's so important. How quickly we fix things is going to be a leading indicator for renewals, because if we're not keeping up with things that need to be fixed, people are going to leave. They're not going to be happy. So that's a really good point on differentiating the two.
Give me a sense of an internal process or system that sets your team apart versus other operators. I mean, maybe we've already talked about some, but is there any other that comes to mind?
I don't know what other people are doing, but I think we are very focused on execution and staying on top of it, where I think not everyone, but there are a number of operators that are just chasing deals. And it's
right.
like, I was just at a conference the other day and talking to someone. They're like, I haven't visited my property in like 3 months. And I was like, are you kidding me? Like, I just didn't. And he's like, yeah, I need to hire an asset manager. And he's this person, and I would never say the name, but they've got quite a bit of properties. And I just didn't think he knew what was going on in good detail on everything that he was doing. And there's a lot of people out there that are just focused on the deal or the capital raising, and they're putting their investors at risk because they're not focused on asset management, on the execution of the asset. And you could have gotten away with it the last probably 9 years.
Sure.
But the difference between, let's say, 92% occupied and 97% occupied on NOI is a huge difference. So if people are managing their properties correctly, you're going to make a lot more money for you and your investors.
I'm a big fan of playing the long game. And I feel like what you're talking about is playing the long game, right? In an up market, in a market that we've experienced over the past 9 years, you can make a lot of mistakes. And in fact, it probably encourages bad behavior. But in my opinion, if you really want to, maybe this isn't the right word, but milk this business for all it's worth, it's about long-term success. And so what you're talking about, like I asked you, hey, what's the system or process that you guys use? And it's like, playing the old school game. It's like being at the properties. It's asking questions. It's being detailed. It's challenging. It's secret shopping. It's surprise visits. It's being hands-on, right? Am I understanding that correctly?
Yeah, absolutely. I'm not doing anything like, super, genius or anything. I mean, these are like simple tasks that anyone could be doing,
Yes.
I'm no genius.
Look, it's easy. It's easy to say, it's easy to explain, but it's hard to do over the long term, right? Because it's inconvenient. It's like, what do you mean I got to go to the property? I got to be there on a monthly basis, or I got to be there. I got to have a call every week. I have all this accountability that I have to hold myself to. I've got to motivate. I've got to inspire. I've got to help people understand what's the strategic vision. And so all of that combined is really, those little things become big things, to your point. If you want to play the long game, like that's the way to do it. So talk to me overall. I mean, let's back into this, because we were talking about sort of asset management. And obviously for you, this is a separator. And I think for anyone who wants to be successful in this in the long term, this has to be their separator. But talk about your investment thesis, what type of assets you guys currently own, where you're going with your portfolio, and so forth.
Yeah, so we own value add B and C class properties, Phoenix and Tucson, mostly Tucson of late, really focusing on that market. Phoenix is really getting, you're paying a lot of money for a C class asset there. Right. So it's tough. I'd love to move more, towards B class properties. We're looking for value in what we're buying. So that's on the buy, and where we could take the property. Typically 3 to 5 year hold. Nowadays, I would say it's going to be closer to a 3-year hold, but I'm going to tell investors, 5 years, because if for some reason, if we hit a downturn or anything, it gives us that flexibility to do some different things to make sure that we're selling at a high point versus a gun to our head and selling when we don't need to sell.
Yeah. So what are you looking to achieve long term? What's the growth of your portfolio look like?
Yeah. So next year, I mean, we hope to do 4 to 6 deals that make sense. Portfolio right now is about 61 million assets under management. We just sold 2 properties this past year. We'll bring another one to market in a few months. It's a great time when you're selling. It's harder when you're buying to find good deals. But
sure,
I'm still very bullish on the market. I'm bullish on our ability to execute. So I'm a buyer, and I think it's a great place to put your money. And so we're gonna keep buying and executing, and even if the market does turn, interest rates go up, there's opportunity everywhere, and so it's a matter of finding those opportunities and changing course if need be. And we've done some adaptive use stuff. We bought a property that was student housing. But really low occupancy, and we converted it to market rate and have done phenomenal. I think we increased the NOI in under a year, like 75%. And there's also some really big units in there that we're chopping up. We also bought garden office space that we're converting to multifamily, and then we're adding 60 new units as well, because of there was a lot of extra land on that property as well. So always looking for new opportunities. I've looked at a bunch of hotels to convert to multifamily. That hasn't panned out right so far, but we're still keeping our eye out for those. So always looking for opportunities to buy on a really cheap basis and see if it makes sense.
I feel like the best way to grow is to execute. And the best way to grow is to deliver on your promises, or even deliver beyond your promises. And that's what we've been talking about so far to a high regard today. And I'm sure that will continue to propel your growth. I also feel like when you are heavily involved and entrenched in asset management, that supports investor relations to such a high degree. Obviously, it lends itself to trust. It lends itself to confidence. But also it makes those calls and those discussions so much easier. You mentioned doing quarterly calls with investors and giving them an insight on, hey, here's what's going on at the property. Here's the challenges that we're facing. Here are the opportunities that we've created. Here's the good news. Here's the bad news. And here's our decision plan moving forward. And certainly, open book here, if anybody has any questions. But what else do you guys do in terms of investor relations that you believe sets yourself apart or gives the investor a great experience to spend with you guys?
Yeah, I mean, our monthly newsletter, we give them a ton of information, and we'll put, we have an investor portal like most seasoned operators. We'll put the financials up there. So we give them a lot of information. So no one really is ever calling me and saying, hey, what's going on in the property? I never had that call. People ask me, do you have a troubled investors? I'm like, no, I haven't. Knock on wood. I'm sure I will at some point. You do enough deals. But I make sure they understand what we're trying to execute ahead of time. And, we give them a ton of information so that, they understand where we're at and make their lives easier. They don't have to chase me down to get information. I'm giving them more than enough information for them to feel comfortable. And, I've got a great rate of other investors bringing in their friends, their associates.
That's what it's all about. It's all about referrals. And that's what I always say on this podcast. The only way we can grow is if people refer or introduce other people to listen to the podcast. And you have to ask for that, but you also have to deliver value. And, so I think the execution factor is important, but also the understanding of what's happening currently in the microeconomic environment, but also the macroeconomic environment is important. You mentioned, obviously, your company is super active in Arizona. Phoenix in particular has had probably the highest rent growth of any city in the entire United States, like 30% in many regards over the past 12 months. Across the country, we're seeing 13% rent growth. That obviously supports low cap rate investments that, you can grow tremendously to a large degree. And who knows where that will go over the next 12, 24 months. But, give me a sense of how you're seeing the economic landscape, whether it's microeconomically in Arizona or across the United States and so forth. How does that impact your portfolio and your overall investment thesis as well?
Yeah, I mean, I see, everyone talks about, hey, we're gonna have a downturn. Yeah, we are gonna have a downturn at some point. But multifamily is, the best risk-adjusted returns out there. So I'm constantly reading, different viewpoints, listening to other podcasts like yours and others to see what the economists are saying. I'm focused on Arizona, which is high population growth, high rent growth, job diversity. I'm going to invest in those areas. One of these days I might invest in an area that's not like that, but my underwriting is going to drastically change because of that. So, like I said, I'm very bullish on real estate long term. Like you said, I'm in it for the long game. So, it's not, get rich quick. It's about providing quality for my investors, and I'd rather do less deals that are high quality, and I'll do better than quantity that I might have one or two misses in there. You're only as good as your last deal, so I want to make sure my deals are outstanding, and I'll sleep better at night, and I'll do better in the long run versus chasing more deals than I might be able to handle.
I heard Naval Ravikant say this quote, and it stuck with me for years. He said, impatience with actions, but patience with results. And so I think if you're impatient with your action of executing on, a sound, solid vision that you have in this business, and you're patient with the results, that's where it pays off. Because, a lot of people are trying to either get in the business, or maybe they've been trying to get into the business over the past couple of years, and it's hyper competitive. And if you continue to press forward and you're persistent, that's where your impatience with actions, but your patience with results starts to pay off. And even for people who've been around for a long time, they're banging their head against the wall saying, man, what type of cap rates are we actually looking at here? Like, this is insane. Like, when is this going to flip? And of course, as you mentioned, like, cycles come and go. It's a fact of the it's a fact of the economy. It does happen. When will that happen? Did it happen maybe last year? I mean, some people are saying, you know what, a cycle now happens every 18 months. So who knows? I mean, from a technological perspective, maybe we're starting to see that, but I think it's really, really interesting. But Gary, talk to me about what role mindset plays in your success, because I know the level of importance that it's played for me, but I'd be curious to know, how does that propel you forward?
Yeah, absolutely. Mindset is so important. Persistence, because it might look good on social media, like, hey, I closed the deal, but man, there's blood, sweat, and tears to get that deal over the finish line, and hurry up and jump. Like, hey, we needed this yesterday when you're trying to close a deal. So being persistent. Getting a deal done, managing your property manager, chasing deals. I mean, we went 15 months without a deal. We thought we were going to be like, boom, like 4 or 5 deals over that period, and we had nothing. And it wasn't like we were not working our butts off, but luckily, I don't have to do a deal just to do a deal to pay my bills. And so we waited for the right thing, and then boom, we had one like every 3-4 months thereafter. Being persistent, being patient, being positive, not paying attention to social media, because everyone you go on social media and then everyone's getting a deal done, and you can't worry about that. You got to focus on yourself.
Yes.
And so I've got to tell myself all the time, like, don't worry about them, just focus on my stuff. So mindset is so important, being optimistic, being positive. Absolutely.
And also not tying your self-worth to, how recent your last deal was. I mean, the 15-month thing, it's like, well, there's probably many great things to say about that scenario. You said no to a lot of bad deals, right? You didn't overpay perhaps when others did. And, in the long run, I'm sure that will pay off. But I'm sure in that circumstance, it was not as easy as it was to describe what you just said. So talk to me about some of the internal communication that you were having with yourself, during that particular period.
Yeah, there was frustrations at time, and you're like, do we go to a new market? Do we do this? But luckily, I mean, I was hunkered down, writing the book, Best in Class. We were working on the summit. We were doing a lot of things to get better as operators, and that let me sleep better at night, knowing that I was getting better, and I was seeing that on a consistent basis. So you do the reps in any part of this business. You get those reps in, and you're just getting better, and you're getting data points, and so you can make better decisions of, that's a good deal, I'm really gonna go for it. And as long as you're getting better every day, every week, every month, long term, long game, you're gonna be fine. It's not a sprint. Yeah.
I think about, like, when delays, so there's this phrase, it's God's delays are not God's denials. And I think that's a really powerful one. And if we really understand that there's a gift in every challenge. And are we the victim of circumstances to say, look, there's no deals, and you know what, we might as well just throw in the towel or go to a new market or just totally blow up our investment strategy? Or do we use this time to strengthen our infrastructure of our company, strengthen our own skills, invest in ourselves, invest in our own mindset, invest in our own fitness or health or relationships or all of these things, right? And so receiving the gift comes through first having the perspective of, you know what, I'm not a victim. I get to receive this and move forward in whatever way is necessary at this point. Does that resonate with you, Gary?
Absolutely.
So Gary, the question that you asked, go ahead.
Oh, it's easy to just say that now, and in the thick of it, you gotta remind yourself. But yes, we knew we were getting better, and you're gonna get highs and lows. But if you have a lot more highs in that perspective, you're gonna make it through.
For sure. Yeah. So much easier said than done. So if anybody's listening who's either going through the circumstance or has gone through it, or maybe anticipates going through some challenging time, just recognize that, yeah, it's easier said than done, but just recognize that you're going to be able to describe this story of this challenge at some point in the future. So time travel a little bit. Mental time travel is so powerful. It's like, what would my future self tell myself about this circumstance? What gifts should I be receiving or should I anticipate to receive in this? Because at any moment, those are there if we look for them. And so, Gary, one question that you ask on your podcast, which I love, is what is your asset management superpower? So I'm going to ask you that. What is your asset management superpower?
Yeah, that's a good question. I would say just being proactive, in everything I do, particularly on asset management. Don't wait for things to happen. Ask the right questions, being curious and shrinking timelines. That really goes a long way in your success in real estate, in life, in everything.
I like how you said that was a good question. I mean, it's your question. Of course, it's a good question, right? Gary, thank you so much, man. I appreciate you being on the podcast. I want to transition into the rapid fire section of the podcast. It's called the Rare Air Questionnaire. It's all about being uncommon. Being proactive is uncommon. Many of the things that we've talked about, doing the hard things that are easy to describe, that's uncommon. So let's talk about a few things. I have a few questions for you. If you had to point to 2 or 3 of the most impactful books you've read over the past few years, what would those be and why?
Crucial Conversations, and it teaches you how to have those tough conversations that we all have in life and business. And I've gotten better. I could still get a lot better, but it's how you communicate something I mentioned earlier in the podcast is so important. How someone receives it and understanding that process can get someone on your team on board versus having someone like despise you. So that's a really good book, Crucial Conversations. And then one of my first real estate books was Buy It, Rent It, Profit, I think it is, from Brian Chavis. Really good book. And that I'm a numbers guy. So that kind of gave me like a good groundwork for investing in real estate. So that was one of my first books in real estate that got me started.
That's awesome. And I've not read that second one, but I have read Crucial Conversations, and I can attest that it's a crucial read in many regards. And ultimately, that's like the glue that puts all of what we talked about today together: communication, how it's received, how it's delivered. Perspective can be everything in many regards. So I think that's important, but we'll put links in the show notes as to where the listeners can find both of those books, as well as Best in Class, so that they can learn from you directly, Gary. So I'm excited about that. But aside from what we've already talked about today, Gary, what's the biggest way that you elevate your life on a daily basis?
Well, giving back to others. I used to have a nonprofit. We had it for about 16 years. That closed down. We worked with underserved youth, but helping others in the real estate business, people have helped me. I'm always sharing my experiences, and I'm an open book, helping people create wealth. So that's a way I give back.
I love it, man. And that's a pattern, man. I see that from many high performers, is that the best way that they elevate themselves is they really elevate other people. But let's take it a step further, man. What's the biggest way that you elevate others around you?
I get positivity, getting people to take action too. They see me take action, and I hopefully inspire them to take action and whatever they want to achieve, and know that anything is possible, and be a cheerleader for them.
I love it, man. And today has really showed us that, these practical insights and showing up on a daily basis, communicating, executing, challenging, having crucial conversations from an asset management perspective can elevate your life. You can elevate so many people around you. You can elevate the people that work for you to take their games to the next level, and obviously so much more. But Gary, I really, really appreciate you taking time today. I know the listeners can find you at breakofdaycapital.com. Of course, also on Facebook and Instagram at breakofdaycapital. But is there anywhere else the listeners can find you?
Well, they can always email me, Gary at breakofdaycapital.com. I'm happy to answer any questions, and I appreciate you having me. This was awesome.
Awesome, man. Well, yeah, it's my pleasure. I'm super excited about having you on the podcast today. Also, the listeners, if they want to go to breakofdaycapital.com, there's a free passive investor guide on the website. So go check that out. We'll put a link in the show notes as to where you can find that. You can also find Gary on LinkedIn as well. But Gary, is there any parting thoughts or words of wisdom that you'd like to share with Elevate Nation today?
Go big or go bigger. I think what Grant Cardone says, that, get after it. The world is your oyster. Make it happen. Why any of us can achieve anything. So go for it.
Boom. Go big or go bigger. I love that. That's awesome, man. Gary, until next time, my friend, thanks so much for being on Elevate. Elevate Nation, I hope you just geeked out half as much as I did, because there's a lot of selfish takeaways that we had for our own business with CF Capital. But I know that this is heavily and practically applicable for anybody who's investing in real estate, whether you're active, passive, whether you're sponsoring deals, whether you're using your own capital on your own direct deals. I mean, at the end of the day, asset management applies across the board. And it is about execution. It's not about talking the talk. It's about walking the walk. And as you walk the walk, you get better and you can refine your systems. You can refine your processes. And so, there's a lot of tips here. There's a lot of things there's a lot of insights that you can apply, that you can play the long game to a larger degree, to a higher degree. So what are those that you want to take action on now? What are the top 1, 2, or 3 practical tips that you want to go ahead and start applying to your business immediately? Is it secret shopper reports? Is it using a Trello board? Is it diving into measuring KPIs? Is it understanding leading and lagging indicators in your business? Is it tying a piece of technology to the way that you communicate with your property manager? What is it that you want to apply to your business today? I want to encourage you to jot that down and challenge yourself here over the next week, the next 2 weeks. Take steps in that direction, because Tony Robbins says, never leave the site of a goal without taking one small action towards its attainment. And so that's your calling card now. What's the action that you're going to take towards the attainment of your goal? And I think that if you're a real estate investor, these are the steps. These are the mechanisms towards getting there. So I want to encourage you to re-listen to this show. I also want to encourage you to share this with a friend and discuss this with a friend. Discuss this with a business partner. Discuss this with another investor in your network. Maybe it's someone that you've met at a meetup recently. Maybe it's someone that you've met at a networking event or virtually. Who is it that you'd like to have a discussion with? Go ahead and put that on the calendar now and have a discussion, because we learn more when we have discourse. We also learn more when we listen again. So repetition is the mother of all skills. So go ahead and listen to this episode again. Most importantly, take massive action. Until next time, Elevate Nation, thank you so much for tuning in, and we will see you next time.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit elevatepod.com.